Good morning and welcome to Stock Market Today. It's Monday, March 11th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. And if you head over to ChaikinAnalytics.com/today, you can sign up for a free email. You'll follow along with this show, get daily stock ideas to consider delivered to your inbox every trading day before the market opens. Hope everybody had a great weekend. It's Monday. Let's dive right back into it. U.S. equities were lower in Friday's trading, capping a losing week for stocks. Energy and consumer discretionary were the biggest decliners. Defensives and materials outperformed. Treasuries were slightly stronger. The dollar was weaker on the euro and yen crosses. Gold finished up 1%. WTI crude settled down 1%. Now, your outperforming sectors, again, utilities, materials, comm staples, REITs, financials were flat on the day. Underperformers, energy down nearly 2%, consumer discretionary, industrials, and healthcare. As we get to the desk this morning, futures are a bit of a mixed bag. S&P futures are up about 10 basis points, but Dow futures are down hard as Boeing is down nearly 9%. Asian equities were higher overnight, with China gaining nearly 2%. European markets are mostly higher this morning. Treasuries are weaker across the curve. The dollar is stronger versus the yen and weaker on the euro cross. Gold down 20 basis points and WTI crude getting some back, up 90 basis points to start the week. Now, the S&P 500, we had a late day rally on Friday to hold near-term support. We've been calling out these support and resistance levels for a while now. Support in the 27.25 to 27.50 zone. You can see we got down to about 27.25 yesterday before rallying back to close at around 27.43. Resistance holding strong in that 2800 to 2820 zone as the market's been unable to kind of break through. Now, we are dancing around a flat 200-day moving average, so that kind of confirms this range-bound trading that we've seen. RSI, we're looking for the RSI to hold within bullish ranges. Now, we've been speaking about this for the past couple of weeks, and what we've said is on a pullback, we want to see support hold, and we want to see RSI hold above 40. So far, that is the case. Add to that, the Chaikin money flow is bullish, and odds favor support kind of holding here in the near term and we'll look for a momentum confirmation. If RSI holds above 40 and the market begins to work higher and then breaks out, that would give us a momentum confirmation. That would tell us that momentum shifted from these bearish ranges that we saw during the pullback into bullish ranges to confirm the rally in stocks. And of course, we'll be looking for Chaikin money flow to remain bullish. So right now, with markets kind of pulling back and testing support, I think it makes sense to start to look for some of the very bullish and bullish names within leading sectors and industry groups that have also become oversold for potential candidates on the long side of the portfolio. Now, our market in a minute. What are we talking about in the note to Chaikin Analytics clients today? Stocks reverse early losses to close near the highs of the day. We hit on that. 10-year yield is testing support near 260. We've been talking about that level for the past few weeks. Continue to think that the path of least resistance for yields is lower. Obviously not going to go there in a straight line. The previous week showed that. We had a back up to about 2.75% before collapsing back down to 2.6% last week. Dollar rises to the top end of the recent trading range, and that's important because it's putting pressure on the commodity complex. Futures, as I said, point to a mixed open as BA weighs on the Dow futures. That is Boeing. Looking at the power bars for the major indexes, you can see that the Dow remains skewed in favor of the bears, having flipped late last week. 6 bullish or very bullish stocks, 7 bearish or very bearish stocks. Slight deterioration in the S&P 500, 127 bulls to 80 bears. NASDAQ, 27 bullish or very bullish stocks, 16 bearish or very bearish stocks. Inline performer on the day on Friday. And small caps, slight outperformer, 405 bulls, 382 bears. Slight outperformance on the day. Bonds upticked. We talked about sending yields lower. According to the Chaikin Power Bar, small cap stocks and large cap stocks are somewhat bullish. The major indexes are mixed. Our stock of the day now, Intel. We've been talking about semis. You know we watch semis very closely, especially their relative relationship, because as semis outperform the market, we think that's a bullish indicator for the market. Now, Intel Closed at 52.48, down 23 basis points on Friday, slight underperformer. Chaikin Power Gauge rating for Intel, ticker INTC, is very bullish due to very strong earnings performance and very positive expert activity. When we take the 20 factors that fall into these four categories, we come out with this very bullish rating. So what do we have? Very bullish stock, strong trend, strong industry group. Type of name we know we want to consider on the long side of the portfolio. Next, ribbon at the bottom of the screen tells us where the rating is and has been over the past 12 months. And you can see we've recently shifted to a predominantly bullish or very bullish rating as Intel has started to outperform the market beginning in early December. And the stock's not quite oversold yet, but heading towards oversold conditions, while Chaikin money flow remains bullish. We have a clear support level here right around $50. So we have a breakout. Now we're starting to pull back for a potential retest. What I would say is this. I'd say above $50, Intel looks compelling as a long idea. Checks the boxes that we look for long ideas. However, I don't necessarily want to jump into it today, and here's why. It's a bit nuanced, but crossing the tape this morning, NVIDIA is buying a company called Mellanox, and Mellanox is viewed as somewhat of a competitor to Intel. So I want to see how Intel reacts to the news of NVIDIA buying Mellanox before really having conviction. As we walk through the process, it's the type of name we want to own, and we have a clear line in the sand here at $50. So normally I'd say above $50, fine. Intel looks compelling, but I want to see the reaction to Intel today, given NVIDIA buying Mellanox. Keep an eye on Intel today, see how it reacts. If there's not much of a reaction to that takeover, I think above $50, stock looks compelling. Keep Intel INTC on a bullish watch list. Looking at our sector tracker now, movement over the last 5 days. Very defensive posture at the top of the list. Utilities and real estate only groups higher over the past 5 days. Communications also has some defensive properties. Now, materials round out the top four, but as commodities weaken with some dollar strength, want to see if materials can still hold that somewhat of an improvement that we've seen in relative strength. Bottom of the list, energy, given some back. Healthcare, we've talked about it. We've been concerned about the relative breakdown in healthcare for the past few weeks, really about a month or so. So not that excited about healthcare just yet. Industrials, financials, and discretionary round out the bottom performers. Staples and tech are in the middle of the road. We want to see tech do well. Largest weight in the S&P 500. Strength in tech is a bullish indication for the market in general. Now, our industry in focus today is retail services. It's one that we've been avoiding. And over the past 6 months, retail subsector has underperformed the S&P 500 by 8.8%. Its power bar ratio, which measures future potential, is weak. You can see 26 bearish or very bearish stocks, 14 bullish or very bullish stocks, earns it a rank of number 16 of the 21 subsectors that we track. It has moved up 2 slots over the past week, but still skewed to the bullish side. Some of the indicative names there: National Vision, EYE, Tiffany. We've spoken about Tiffany, very bearish. And Burlington Stores. Burlington's already gapped down, BURL. All of these stocks have very bearish Chaikin Power Gauge ratings. So let's take a look at National Vision here today. Ticker EYE. Very bearish stock. Weak trend. Now, you see here a strong industry group. That's because it's being bucketed in with medical products, but it's predominantly a retail name selling medical products, i.e. glasses. And we can see here clear breakdown, rally back to reset, and then retest, and then rolling over again. But let's walk through the process. Dynamic Duo's in gear here as the stock's been on a bearish rating since October and underperforming the market since mid-November. So Dynamic Duo in gear. Market and model are in agreement. However, if you're interested in opening a bearish position, I'd say the timing is just not right yet. The reason for that is the stock is oversold based on our overbought, oversold indicator, and money flow has been bullish. I'd rather see a rally here, and as long as the stock, stays under 36 on a rally, then we see an overbought condition, and then I think it looks compelling to open to the bearish side via some puts or some put spreads, or if you outright short the stock, that makes sense, however you choose to do it. But I'm not there yet. I think it's the type of name you certainly want to avoid, especially as long as it's below $36, but the timing not right yet to open a bearish position. But we do have a clear line in the sand to shoot against. Let's keep an eye on it. For those of you who trade to the bearish side, keep an eye on EYE. kind of made a cheesy pun there without even thinking about it. Now, our trending names, S&P 500 gainers and losers from Friday, LTHM, a little bit of a rebound. Remember, they were on the loser side of the board on Friday morning. Costco beats and had some positive gross margins. That sent that stock higher by 5%. H&R Block reaffirmed their guidance, higher by 3.25%. Seagate and Micron, no real news to send that one higher. A bit of a rebound here in some of the storage names. Seagate higher by 2.25%. Micron higher by a little bit more than 2%. Loser side of the board, 4 out of the 5 names are energy stocks. They were one of the worst performing sectors of the day on Friday. Noble, EOG, Devon, and PXD. Kroger just extending some weakness following their earnings, down 4.45%. What's interesting to me here is we're seeing weakness in these energy names. Remember, we've been bearish on energy, and we're seeing weakness in these very bearish names. Now, as oil rallied, some of these names picked up their head. Oil seems to be stalling out just below resistance, so some weakness in the energy names here to be expected. You can look for opportunities there. So what are we talking about in our note today? Now, it's macro day on Monday. We keep a look at the cross-asset research that we do and analysis, take our view beyond just stocks and look at what's happening in rates, commodities, currencies. So let's take an eye. Starting with the 10-year yield. After falling into this consolidation, we've been in this trading range between 2.6 and 2.8%. We continue to think the path of least resistance for yields is lower, as we are below a declining 50 and 200-day moving averages. I think this support level is likely to break. Is it likely to break today? I don't know. I just think the odds favor it breaking because we are below these moving averages, indicating we are in a downtrend, and RSI is locked in bearish ranges. Remember, we were talking about the S&P, how we wanted to see it hold above 40. Notice what's happening here. Notice how RSI can't get much above the 50-60 level, even as we consolidate. That is a bearish momentum range, confirming this downtrend in yields, increases the odds that yields are going to break lower. What does that mean for equities? Well, we could see continued strength in these bond proxy groups that we've been talking about, like real estate and utilities. So just keep that in mind as you're looking for names. Additionally, you could see some strength in these dividend growth names. DGRO is an ETF that we're looking at today. Bullish Chaikin Power Gauge ETF rating, outperforming the market really mostly since October, but predominantly since the summer. Has become oversold with bullish money flow. We have a clear line in the sand here at $35. I think as long as DGRO is above $35, it's a compelling addition to the portfolio. For those of you who look at ETFs, and if you just want to look and drill down on some of the names within that group, you can look at a name like DTE, our bullish stock of the day today. Look for some of the bullish and very bullish stocks that are holdings of this ETF that have become oversold and meet the rest of the kind of criteria that we look at for bullish entries, right? Bullish stock outperforming the market becomes oversold with bullish money flow. Those are the compelling entry points, especially if they're in leading parts of the market. And in this case, I think that these dividend growth stocks are a leading part of the market. You can look away from just the sector work that we normally do. U.S. dollar moves to the top of the range here. Check out the dollar here on trying to break out above the 50-day moving average, above the 200-day moving average. Notice that during this consolidation, RSI has not been able to become oversold. That, to me, speaks to the strength of this trend off the lows since the beginning of 2018. Continued strength in the dollar, likely to pressure the commodity complex. Here's the Bloomberg Commodity Index, and you can see it's fading from resistance as the dollar starts to strengthen. Unable to become overbought, now heading lower again. I think best case scenario is consolidation for the commodity complex, but should we continue to see strength in the dollar here, I've given you this dollar chart. Look, a continuation of this breakout likely leads to further weakness in the commodity complex. That's going to weigh on the material sector, could weigh on the energy group if oil falls as the dollar rises. So just something to keep in mind. It's always important to pay attention to what's happening in other parts of the market to inform your view on what's going on in the equity market. So that's it for today. Sign up for the email, chaikinanalytics.com. chaikin.com/today. Get daily stock ideas for you to consider in your inbox every day before the market opens. I will see you back here tomorrow. Have a great Monday, everyone.